So what happens to my policy if I don't pay back my loan? You're usually okay. However, there are some things that I want to be aware of. So firstly, if you have a loan outstanding and you don't pay it, what's going to happen is loan interest will be due. And if you don't pay that loan interest in cash, your life insurance policy will take a loan against the available cash value to cover that interest payment for you. Now, your policy can lapse if your cash value is all but gone. This can happen if you have a maximum loan outstanding and you don't pay any loan interest and you're not making any more premium payments. What usually fixes a case like this, if you do have a maximum loan outstanding and your interest is coming due, is A, paying the premium, B, paying the loan interest, or C, applying some money toward the loan principal. That can also fix this in some cases. Now, one important thing to be aware of is that if a policy lapses with a large loan outstanding, it can result in a taxable event. One, if a policy lapses or if you were to cash it out and there's no loan outstanding, but there's a gain on the cash value, you have to pay ordinary income tax on the gains. However, if there's a gain and there's a large loan balance, what happens is any unpaid loan interest that has accrued also counts as a gain, which can result in a large taxable event if a policy does lapse. Now, with that said, it is quite rare that I'd see a whole life insurance policy lapse in a case like this. That's more common with universal life type products, but it is possible. At the same time, it is easy to prevent, and the real easy thing that you could do is just to look at illustrations in advance, specifically conservative numbers. Now, what that means when I say conservative numbers is first, looking at the dividend interest rate, I would not just run that based on the current dividend rate, I would run a conservative dividend interest rate. If you want to be super conservative, I would look at the guarantees. Another thing you could do, if you have a variable loan rate, is look at that loan interest rate. And did you know, when requesting a life insurance illustration, you can ask your agent to see a higher loan interest rate. Again, that's if you have a variable loan rate with your policy. But the big thing that I would do is look at my policy with loans and I would ask for the following. What does it look like if I just let my money sit and grow? I never touch it. Then what does it look like if I take a loan and I don't pay anything? So I don't pay any loan interest, any principal, I just let that loan balance ride over time. Then what does it look like if I pay interest only? And then what does it look like if I pay the loan in full? Seeing those scenarios before you take any loans can give you a ton of peace of mind or provide awareness so you don't loan too much money against your life insurance policy, especially if you have no intention of paying it back. So let's take a look at an example here. This is actually for someone who is interested in a policy specifically to pay for one of their kids' college tuition. So they're 54, they're funding a policy with $125 per year for 3 years, and they never want to make another payment after that. So first, we see what the policy looks like if they just park the money and let it sit and grow. Okay, great. Let's look at this exact same illustration, but with loans coming out for college tuition. So they've got 3 years of college tuition left. So we see 3 loans coming out of $100K per year. They go to school out in USC. It's not cheap out there in California. So this example displays $300,000 in loans coming out and never making any payments toward the principal or toward the loan interest. So effectively what you've done here is you paid in $375, you pulled out $300. So how I would look at this is my net input is $75,000. So what does the policy look like if I never pay anything toward that loan? Well, my loan balance compounds because that loan interest is accruing over time. The cash value for a while hovers right around 55K, but then begins to compound. I continue to earn interest on my entire cash value, which is money that's not borrowed and money that is borrowed. That's why I see the cash value continue to compound. And by the way, this is your net cash value, meaning net of the loan. And the same is true of the death benefit. So this displays the worst case scenario. I'll also add, if we made those loans $115,000 or $120,000 per year, it wouldn't look as good. It would be a situation where she would have to pay something out of pocket to prevent a lapse from eventually occurring. Then we've got the exact same illustration, but paying interest out of pocket every year. So this one, you'll find that the loan balance stays the same because in purple, we're assuming she pays that interest of about 16 grand per year indefinitely. But she doesn't have to do it indefinitely. We modeled that just to keep things simple. And then lastly, if she does decide to pay the loan back in full, here's what you'll notice. So you can pay it back however you want. But here, she paid it back down here in year 12. Your cash value is $585 and change, and your death benefit is $824. If you compare that to these values on the far left, they're exactly the same. And that just illustrates the fact that your money continues to compound even though you had a loan outstanding. So again, the question was, what happens to my life insurance policy if I don't pay back my loan? The answer is the policy will take a loan against the available cash value to cover that interest for you. As a result, the loan balance does compound. You'll also see your death benefit come down a little bit too. However, if you leave enough cash value in the policy or enough juice in the orange, the policy can recover as the compounding can exceed the loan interest. But to protect yourself from the opposite, I would just request to see illustrations specifically showing what does it look like if I take out these planned loans, but life happens and I can never pay them back. So I hope you enjoyed this video. Let me know in the comments below. And as always, I hope this helps.